What is up, guys? Today we're going to go over a little bit of trade recap for this Friday, some top-down analysis, and a little bit of advanced ICT market structure. Okay, so if we notice here on the hourly time frame, okay, so our main charts are going to be after we do our daily analysis. The main charts, you want to go from the 1 hour to the 15. You can go to the 5 to confirm the 1 hour, and then the 1 minute. But mainly the staples are 1 hour, 15, and 1 minute. Okay, you guys have heard me say that before multiple times. So we're gonna start on the 1 hour. So this morning, this opening dealing range, this was our 9:30 to 10 opening price, and the opening dealing range. So that's why this is there. But if we look at this price leg, right, we have these last two down bearish candles, right? This is your 1 hour order block, your bullish order block, the top of this body. Okay. As soon as this candle closed above it, this becomes your order block. The whole order block is these two candles, but we use the top of it there. You also have your 1 hour market structure shift here. When this candle breaks it with the body closure and it creates this displacement, we have 1 and 2 fair value gaps in this whole price leg. Okay. This is a market structure shift on the 1 hour. And I'll just mark this up. 1 hour MSS. Because if we look here, I'll move it up a bit. We have this high, higher high, lower high. This is your swing high. Okay. So that's why this is your market structure shift on the 1 hour. So if we take our GAN box and we measure price from the bodies up to the high, we want to look for the nearest fair value gap underneath 50% or in a discount, right? So anything above 50% here is your premium. Anything under 50% is your discount. Okay, so this is premium, discount. If you want to take sells, you want to be in a premium. If you want to take buys, you want to be in discount. So when market's in a premium, it wants to move to a discount. And when price is in a discount, we want to move to a premium. Okay, so this is our premium and discount price leg. So underneath 50% in a discount, our nearest fair value gap is this 1 hour here, right? So we pairing it with this 1 hour order block, 1 hour fair value gap. Okay. We will come down to the 15-minute and look for, if price is running down, we're looking for it to tap into this fair value gap paired with the 1 hour order block. And if you see here on the 15-minute, we tap it perfectly there, transpose from the 1 hour down to the 15-minute here. This was at 11:30. We come into lunch. So this is our no trade time. After at lunch, we put in this low here on the 15-minute. So this 15-minute lunch low is technically your nearest sell side when we're coming into the PM session at 1. Okay. So with that being said, if we know, let's say we come after lunch, we're in 1:30, 12 to 1:30. This is the nearest sell side. We also have a sell side underneath here and these equal lows. So this is your internal, this is your external, and your other external liquidity here. But we're waiting for time and price. So our time being the silver bullet window PM from 2 to 3 as our first window in the PM session to look at. Okay, so we move price forward closer to that 2 p.m. We can see we already broke this structure here with the closure, retest this area, and start heading towards this 1 hour fair value gap and the 15-minute lunch lows, because anyone that bought here chasing price back up into lunch or was trading the lunch hour unknowingly that this is our no trade hour, their sell stops or their stop losses are most likely down here. So this is your liquidity. So we drop down to the let's see this next candle right into our 2 p.m. So we drop down to the 1 minute. You see here. So just before 2 p.m., we get this market structure shift here. Okay, so the candle that closes and breaks is these two candles. So if we see price starts to come back here, we measure this price leg. We'll use the bodies. Here. So the first fair value gap that you see above 50%, again, this is just on the smaller time frame. Premium, discount. Price is in a discount. We want to see it come back up into a premium once we break the market structure. So the first fair value gap in a premium is right here. Okay. So this is our new lower high we put in. If you knew that the 15-minute lunch low is your draw on liquidity, right? We have relatively equal lows there. This is the 15-minute lunch low. Then taking a short here with your stops just above there at 3, we'll go 350. And then targeting sell side liquidity for 650. You can go for your 5 there or target the lunch low. You're tagged in there. And if we play price forward, takes it out. Now, this is one silver bullet trade there. So now that we've taken sell side and swept it here, you have a swing high here. So we've tapped into 15-minute lunch lows, taking out sell side liquidity. And we hit that 1 hour order block here, created this low, and then swept it. So price begins to rally higher. Okay, breaks structure there. This is your market structure shift. We leave this gap here. Price continues to break structure. This candle body breaks this high. So this is your official confirmation or your break of structure. People call it change of character or chalk. Um, so this is your shift and this is your break of structure confirmation. We can continue to rally higher. Oh, geez. No, I still want to do that. Let's go back here. Do you want to exit? No. Just want to go back. Okay. Let me play price forward once. So we notice price is starting to retrace, right? What do we do? Same thing we do here. Body here. This is your new price leg, right? So what's the first fair value gap in a discount? This one, right? So now that we broke structure here, this is your new form of liquidity. Okay. And I'll go over this in a second here. So why is this your new form of liquidity? Because this is your new intermediate term high. Okay. Intermediate term high. Okay. What does that mean? So and we'll see as price moves forward why that is. So we'll make this here. This one be red. This is where we get into this market structure. Okay. So, ooh, I'm just drawing all over the place. Okay. So, an intermediate term low has two short-term lows to the left and the right of it. Okay. So these two higher swing low to the left and a higher swing low to the right. The one in the middle becomes your intermediate term low. Okay. So these two lows make this the ITL. Okay. And if we move price forward, right, taps into this 1 minute fair value gap that's in a discount of this leg. So this would be your entry here. And then you could target this high. So we start to bounce up. Now, if you notice, this low has a short-term low to the right and a short-term swing low to the left. So that makes this your intermediate swing low, right? It's the same premise that when we think of our market structure shift pattern. Same premise here. So just swing low, right? Short term, intermediate, short term. Okay. It could also be like this one, but these are pretty equal. So I just use this outer one, but it's the same thing here. So this is your new buy side liquidity because it's your new intermediate term high. What makes this an intermediate term high? Might you add? Okay. If you notice, this has an intermediate term high to the left of it here. And now an intermediate term high to the right of it here. So it's the same structure as this we have on the upside. So those are your short-term highs. So we have one there and then one to the left of it, making this your intermediate term high. Okay, short-term high, short-term high. So this is your new drawing liquidity for 6 points with your 5-point stop there. Now, because this is an intermediate term low that swept this ITL, once this is formed, we know for sure that price, if this is going to be a valid trade, price should not sweep this ITL anymore, because this ITL is the one that swept this liquidity. Okay, so I hope you guys follow that. So because this ITL swept this one in the form of sell side, this one should hold. Okay. We notice we kind of have another one here with this ITL because it was short-term low, short-term low. Okay. But this one did not sweep this one. Right. So another trick. How do we know in this last hour of trading, right? This would be you're getting in, right? I mean, it's still in the silver bullet at the tail end of the silver bullet window here. So this is valid as well. Now, how do we know to project, how high could we go if we leave a runner here? So where's the leg that took out the sell side? It's this short-term high to this intermediate term low. So this price leg took out sell side here. So what we can do is we take our fib here from the low to the high. And if we were to swing this like a door open, like on a hinge up, right? If we were to flip it like a mirror up one time, so this would be the hinge, and this is the door that opens, right? If we move it up one time, then this would be about where you could see it project to. Let me make sure I got this here to there. Okay. Now, it's not going to go perfectly, so we could go like just under it or shoot for our 10 there that we always talk about, either 5 to 10 points, right, in our silver bullet rules. So, but we know we're lining up with how far it could go if we leave a runner after 5. Okay. So we're in here, price comes back in, right? We know this ITL was going to hold. We run up. And boom, right there, your 10 points are hit right at just before 4 o'clock. Now, what's interesting, right? If we take a line from this price here, we run it back just above that standard deviation 1. We open here. So pretty cool when you can start learning these advanced market structure techniques and price projections. Now, it's not the standard deviation here. I'll leave these settings up for a second. That is the magic. The magic is in the market structure here, right? So if we open this up one time, this gives you about this projection here. Okay. So this here opened up like a door one time. It's about there. So just you could have targeted just below there. And what do you got? Anything extra is bonus, right? So that is our little bit of an advanced class there. But yeah, so thank you guys for watching. If you have any questions, feel free to reach out. Until next time, trade safe.